Imagine you're standing on a beach watching the waves roll in. Some waves are small and gentle, while others are strong and towering. If you tried to predict the biggest wave of the day and jump in at the perfect moment, you might get it right once or twice. But most of the time you'd either miss the best waves or get caught in a rough one. This is exactly how the stock market works. Wall Street analyst Tom Lee has made a bold claim. The next 10 days could create millionaires in 2025. It sounds dramatic, but his reasoning is based on history. Lee believes that investors who panic and leave the market now are making a mistake. Instead of trying to time the waves, he argues, it's better to stay in the water and ride the tide. Who is Tom Lee? Tom Lee is a well-respected Wall Street analyst and the co-founder of Fundstrat Global Advisors. With decades of experience in financial markets, he has built a reputation for making bold yet data-driven market predictions. Before founding Fundstrat, Lee was the chief equity strategist at J.P. Morgan, where he guided institutional investors through various market cycles. His insights are widely followed by traders, hedge funds, and retail investors alike. Lee has successfully predicted several market trends, including the strong recovery of stocks after the 2008 financial crisis and the resilience of technology stocks in the 2010s. He has also been a vocal supporter of Bitcoin and other cryptocurrencies, correctly forecasting their long-term growth. His ability to analyze market data and identify key opportunities has earned him credibility in the financial world. Lee points to a fascinating pattern. Almost all stock market gains happen on just 10 key trading days each year. Think of it like a championship sports season. If a team only shows up for practice but misses the most important games, they won't win the trophy. Investors who pull out of the market in times of uncertainty risk missing these crucial days when stocks surge. For example, last year the S&P 500's 10 best days accounted for 21 percentage points of its overall growth. Without those 10 days, the market would have barely moved. This trend has been true for 90 years. It's like missing the one day in the year when your favorite store has a massive sale. You lose the biggest opportunity to grab valuable items at the best price. Research from J.P. Morgan shows that missing just the best 10 trading days each decade can significantly lower overall returns. From 1993 to 2022, an investor who stayed fully invested in the S&P 500 would have seen an annual return of about 9.8%. However, missing just the best 10 days would have reduced that return to around 5.6%. This demonstrates how critical these few days are in determining long-term gains. Right now, the stock market is acting like someone dealing with mood swings. Investors are panicking due to fears over tariffs and a recent wave of stock selling. Some, like J.P. Morgan, are even advising a bearish stance, betting that prices will go down. But Lee thinks this fear is overblown. He argues that stocks might actually be close to bottoming out. It's like hearing a loud thunderstorm and assuming it will last for weeks, but in reality, the sun might be just about to break through the clouds. Lee believes that investors should not flee the market but instead hold on and wait for the brighter days ahead. Lee isn't just making predictions, he's pointing to specific opportunities. He highlights 3 companies that could turn an ordinary investor into a millionaire in just 10 days. PayPal, a leading company in digital payments, is thriving as cashless transactions become the norm. Companies in this industry are like the toll booths on a major highway. Every car or transaction that passes through earns them money. Digital payment transactions have been growing at an annual rate of 12%, and by 2026, the industry is expected to be worth over $10 trillion. PayPal, founded in 1998, revolutionized online transactions and became a dominant force in digital payments. With over 430 million active accounts, it continues to expand into crypto, buy now, pay later services, and financial technology innovations. PayPal's stock saw massive growth during the e-commerce boom, reaching a high of $310 per share in 2021 before declining. Analysts believe that with its continued innovation and dominance in digital finance, PayPal could rebound strongly, making it a potential game-changer for investors. Match Group, a global giant in the dating industry, has revolutionized how people connect and find relationships, much like social media transformed communication. Companies leading this shift stand to make huge profits. The online dating market is expected to reach $12 billion by 2030, driven by AI-powered matchmaking and virtual dating experiences. Match Group owns some of the biggest dating platforms in the world, including Tinder, Hinge, Match.com, and OkCupid. These platforms collectively serve millions of users, making Match Group a dominant force in the industry. As the demand for digital dating continues to rise, Match Group is investing in artificial intelligence to improve user experiences such as profile suggestions and automated message prompts. With its vast market reach and continuous innovation, it remains a strong stock investment option. If you are enjoying this, take a moment to like this video and invest in my content for absolutely free. Just hit that subscribe button. Jumping right back in with number 3. Advanced Micro Devices, a semiconductor powerhouse. Almost everything we use today, phones, computers, cars, relies on semiconductors. As technology advances, these companies are like gold miners in a digital gold rush. The semiconductor industry is projected to grow from $600 billion in 2024 to $1 trillion by 2030, thanks to increased demand for AI chips, cloud computing, and electric vehicles. Advanced Micro Devices, or AMD, is a key player in the semiconductor industry, competing with giants like Intel and Nvidia. AMD is known for its high-performance processors used in gaming, data centers, and AI applications. In recent years, AMD's stock has surged due to its cutting-edge chip innovations and growing market share. With the rapid expansion of artificial intelligence and cloud computing, analysts predict AMD's stock will continue to rise, making it a strong investment choice for the future. Looking ahead, Lee anticipates market rallies in March, April, and May, potentially leading to 10 to 15% gains. He acknowledges that the first half of the year may be rough, but by the second half, changes in tax policies could turn things around. This is like planting seeds in the winter. The ground may be frozen now, but in a few months those seeds could sprout into something big. Investors often believe they can predict the perfect time to buy and sell, but history says otherwise. Many of the biggest market gains happen unexpectedly. It's like skipping breakfast and lunch, hoping for a perfect dinner, only to realize you missed the best meals of the day. A 2019 study by Charles Schwab found that an investor who stayed fully invested in the stock market between 2000 and 2019 would have achieved a total return of nearly 200%. However, missing just the 5 best trading days would have cut those gains in half. This proves that even missing a handful of crucial days can have a devastating impact on long-term returns. Lee's advice is clear: don't try to time the market. Stay invested, ride out the tough times, and be ready for those crucial 10 days that could make all the difference. The stock market is full of ups and downs, but those who stay the course tend to come out ahead. Tom Lee's prediction isn't about gambling on a quick win. It's about recognizing the power of patience. Just like the ocean, the market has its rough days, but those who keep swimming are the ones who catch the biggest waves. If you found this insight valuable, smash that like button. Don't forget to subscribe for more market info and drop a comment below with your thoughts on Tom Lee.